Hey everybody, it's Will at VIP Mortgage. It's time for local lender update. Rates are pretty close to unchanged this week. We've been moving sideways after a couple of weeks of rates going up, and the market is trying to sift through the data. There are some concerns that inflation is starting to ramp up again, and frankly, I think it's a little strange that it's impacting the market the way it is. So we're looking at different kinds of inflation readings. A couple of weeks ago, we had the consumer price index, which is the one that gets all the headlines. The favorite measure of the Fed for inflation is the PCE. That will come out at the end of the month. Today, we got the producer price index. This is the index that measures inflation at the wholesale level, right? If you're ordering goods or producing things that need to go to market, this is a measure of what's kind of going on in the background. And that reading came in actually slightly lower than expected, but the problem is they went back and revised numbers from earlier in the year, and they revised those numbers up slightly. So this is data that has already been accounted for, that we've already taken a look at, and it got revised slightly upward, and that's causing fears that when we see the next inflation reading, we may see inflation creeping up a little bit for the year. So it's a little strange that that kind of movement is what has caused rates to move back upward a little bit, and the expectation for this next inflation report that is going to make a bigger difference to what's going on, that report's still expected to look pretty good. So one of the key numbers in there is the shelter cost, and that looks like it's finally going to catch up in the report. Those shelter costs have been staying stubbornly high. In real life, rents have been coming down a little bit, and so it looks like that's going to kick in for the next report. That should give us some good news. The whole game that we're playing right now is where should the bond market be priced, and how does that affect mortgage rates? And the bond market's trying to figure that out now that we're in a rate cutting environment instead of a rate raising environment, or holding those rates steady at a higher level. All of those things are causing people to be a little uncertain about what's going on, and uncertainty is not something that the market likes. So we're going to see a little bit of volatility. As I've been saying since before the Fed cut rates, there's going to be a shakeout period. We're not going to see a steady straight line of inflation just coming down. There's going to be a couple of bumps in the road, and when that happens, it's going to affect the market a little bit. Long-term expectations, we are in an environment where over the next several months, we'll get a better handle on what's going on in the economy, and the Fed is planning to cut rates so long as the data continues to support that. So if there's anything we can do for you, if we can get you a rate quote for your specific situation, please give us a call at 719-232-7553.